Okay, we are in March 2025 and we are experiencing a 10% pullback. 10% pullbacks on the stock market are fairly common. They happen usually about once a year. In 2023 and 2024, we didn't experience many of these. So they sort of feel like a little bit foreign to us because we've been so spoiled by this bull market lately. But this is not uncommon. I do see a lot of people sort of like worried, like it's the end of the world, or having a little water tossed on their bonfire. But keep in mind that this is really normal. It's also a great opportunity. And I don't really use it for a buying opportunity. That is not what this video is about. It is an opportunity to refine these 4 things, okay, that I'm listing right here. The first is use this time to discover the best stocks on the market. They will emerge. The institutions will show you which stocks they prefer and which stocks they'd rather not invest in or they don't want to pump when the market comes back. You can refine your strategy right now. So you're going to notice, like if your portfolio and your stocks pulled back more than you are comfortable with in a 10% pullback, this is a great time to reevaluate what you're holding and make yourself stronger for the future, okay? The next thing is learn new trades. It's a great time if you're an options trader to test out some of those bear market ideas and strategies that you may have learned. And then the 4th thing is work on your mindset. I can't emphasize this enough. It is really important to manage your mindset as an investor and an options trader. Times like this can feel like they go on forever, but I promise you they are really short-lived in the grand scheme of things. And no one is immune from a pullback. No one. Even those traders that say, oh, it doesn't matter if it's a bull market or a bear market, I can still make money. Yeah, that is true. But there is an initial adjustment period. No one can say that there isn't. So if you're getting a little FOMO with somebody else saying, oh, I make money when it goes up, when it goes down. Sure, they do, but it does take an adjustment period. Don't let anybody fool you there. Okay, so how do these pullbacks reveal the best stocks? That's the first topic that we're going to talk about. So if you know my system for stock picking, I will tell you it right now. If you don't, okay, it is going to be that I am looking at stocks that have rising 5-year, 1-year, and 3-month charts. And if you go and look at the market right now, there are not many stocks that have a rising 3-month chart because we have this pullback. We're experiencing this pullback. So somebody actually asked me yesterday on one of my coaching calls for my Millionaire Mentorship Program, what do we do now? And I'll have the answer for you in a minute about that. But we need to remember that those rising 5-year, 1-year, and 3-month charts, when the market is good, show us overall what stocks the institutions favor. The institutions are, insurance companies, college endowments, big banks, people and institutions that have millions and millions of dollars that they are pumping into the stock market. ETFs and even some mutual funds would apply here in this institutional category. So what stocks are they preferring? Okay, a pullback shows us what they prefer. Okay, how does it do that? Those stocks pull back less hard. Okay, so institutions are the biggest players on the stock market and they hold most of the shares. Retail traders are super insignificant, except for in meme stocks, which we are not talking about, okay? So they hold most of the shares. If a stock drops, it's because institutions sold that stock. And if a stock rises, it's because they bought. There are so many people that just don't realize this, and this is just a fact. And once you realize that that's a fact, it's really easy to see what the institutions are doing, what they're holding on to, what they're letting go of, okay? So if you see your newest high flyer stock, that went up 40% in the last year or in the last 3 months, and it just fell 15%, and then you compare that to something like Visa, which is not down at all, it shows you that the institutions left that high flyer stock, but they stayed in Visa. And we're going to go over why that is, okay? So when the market pulls back, institutions don't sell everything at once. They sell out of the stocks they believe pose the largest risk to their bottom line first. So they sell out of stocks that they are not liking for one reason or another, all right? This means they hold on to the best stocks or sell less of their position in those best stocks, the stocks they think are the best. So if we do a little research into which stocks dumped and which held their value, this quickly reveals to us which stocks that the institutions are favoring, which is valuable information. It's really valuable because it's showing you the playbook for the coming months, okay? You really can't discount that. Like, I love a 10% pullback to a certain degree because it's showing me which stocks the institutions are going to favor going forward. And if we have another pullback, which is very likely, like we might not have seen the bottom right now. That's very, very likely. If I did have more money to invest, I wouldn't be investing it in those stocks that pulled back dramatically. I would be investing it in the stocks that have held their value. That's just a simple way I would use that information, okay? Number 2, if your stock portfolio drops a lot during corrections, it may highlight to you that you are in stocks that are not favored by institutions, okay? So we can take this information and allow it to be part of the decision making for the new positions we create, okay? 2 tips here. Institutions love dividends, okay? So even if their stock portfolio is down, they can turn around so keep in mind that the institutions aren't really necessarily trading their own money. They may have traders that work for them, or they may have like a firm like Morgan Stanley that is potentially handling their money for them and trading for them, okay? So if that trader and that trading firm can turn around and say, hey, yeah, your portfolio is down, but we did get you $15 million in dividends, that's still good news to the institution, okay? So it's sort of like that's why they love the dividends. So institutions will drop non-dividend paying stocks faster than dividend paying stocks. So keep that in mind. Keep that in mind. So a dividend is really not only a benefit to the retail trader because we get dividends and we get income and we get taxed at a lower rate for dividends. It's also an insurance policy against dramatic pullbacks. Okay, one of my mentors taught me this and I was so annoyed because some of these dividend stocks, they don't necessarily rise as quickly as some of the newer stocks or the hot stocks when we are in a bull market. They're slower going up. However, they just are far more reliable during pullbacks. And so that makes them very valuable. We tend not to think about the day that the chickens are going to come home to roost, but maybe we should. So this is an evaluation time. 10% pullbacks are evaluation times, as into what you are doing. If you're feeling uncomfortable, you need to take a look at that uncomfortable feeling and go, is this making me uncomfortable enough where I want to adjust things? Or is this just something where I need to adjust my mindset through these pullbacks because I do still believe in my overall theory of what I'm investing in? What is the answer there for you? You need to take some time to figure that out. Okay, pullbacks reveal which new stocks have staying power. Okay, so there are some high flyers. There have been high flyers this year. There's been Hims, there's been Palantir, there's been Hood. Those are some that come to mind for me. Okay, and the ones that have not pulled back show you that they have more staying power than the ones that have pulled back. You see that? Because again, the institutions are dumping the shares that they don't find enough compelling evidence to stay in that stock during this time, because this time is considered higher risk than when we are just bullishly moving forward. Okay? So this period of time separates the men from the boys or the women from the girls, right? With those dividend paying stocks and with the high flyers. But I love to see which high flyers are going to stick around through something like this. This is really interesting to me because I do like to trade a certain percentage of high flyers. And this gives me revealing information about what the future is probably going to look like. It's just another data point. So I love collecting that for myself. And then number 4, watching which stocks drop the least during a pullback is a playbook for our comeback. Okay, so how so? So the institutions are paying close attention to which stocks retain value or rose during this time. And when they are ready, what's happened? They sold their stocks. Okay, so what are they doing? They're sitting in cash. And they can't make money sitting in cash. Like they have to start trading or they have to start investing at some point. So at some point that cash will come back into the market and we need to know where it's going to go. Where's the money going to go? Anyone have the answer? I think I have the answer. It's going to go into the stocks that retained their value or rose during this time because those have just revealed themselves as the first class stocks. So not only will this allow you to see like which stocks retain their value, it'll also be able to inform you which stocks are likely to rise again when we take off again. So like pullbacks, right? They suck when you're in the middle of them, but why wouldn't you use this information and use it to your advantage? Because it's there and it's so easy to take advantage of once you see it. Okay, so we're going to go into some charts right now. I might have to disappear off the screen for this and just pull myself to the side on my app here. And we're going to look at some charts that are on my stock watch list. These are stocks that had rising 5-year, 1-year, and 3-month charts as of like 4 months ago before this pullback happened. I like to see how they're doing now, right? Like that's valuable information. So here's me doing my research. I did this last night on March 19th at after hours. And it's really interesting to see what's happened here. These companies all have rising revenue and rising profits for 4 years in a row in the last 4 years. And they're really on the stock watch list that I keep, that I trade these stocks or I am looking at them to invest in or I am invested in them. Okay. So let's go through them. So we've got Costco. Wow. This one is really interesting because this stock is so expensive. It is one of my favorites, but it has been as high as like 1,040 a share or something like that. And now it's down to 904. That seems like a big difference, 1,000 to 900, but it's 10%, right? So normal there. It actually says it's down 7%. So not dramatic. Apple is down more, close to 13%. Walmart is down about 9%. And then Nvidia it shows it being a plus, but it's not. It's down some. I think it's because I have this little line here and that was what it was measuring. So I don't know, that looks like it's also down probably like 10%. Okay. So these are, some of the hot stocks, but they're just not, this is how they're reacting. Okay. Here's another, page where we've got Morgan Stanley down 4%. That's not so bad, right? I mean, there seems to be a little bit more of a preference for a Morgan Stanley and a Costco and a Walmart over sort of like an Apple. Meta, huge price swing because it's high priced, but still only down 4%. Lowe's down 9%. Amazon down 12%. Okay, so there is a little bit of volatility that I also want you to consider here. Meta and Amazon are similar. Like Amazon has more volatility in it than say like Apple, and Meta has more than Amazon. So this is also something when you get good at this that you can start to consider, because those swings can be bigger just because of the volatility in the stock. But it's still super interesting to look at this, I think. Okay, and then we're going to look at these guys. These are the winners, okay? These are the winners. And like the stock watch list that I have, Visa is up. I would believe MasterCard would be up as well. I didn't do that research, but Visa and MasterCard just work in such synchronicity with each other, that I believe that would be the case here. But look at this. Visa, winner, winner, chicken dinner, up 9%. JP Morgan Chase up 3%. Palantir up 16 or 17. That's the high flyer, okay? And Waste Management up 10. I don't know anything that can keep Waste Management down. That stock is it's a snore to options trade because it just doesn't grow that fast, but it just always grows. It's insane. I just love that stock. Okay, so Palantir. Remember when we talked about the high flyers, okay? This is one of the high flyers, and guess what? It is still high flying during this time. Super interesting to me, okay? So when the market pullback was happening, and it pulled back pretty dramatically because it was like at 120 and then it pulled back to 86 or something like that. I was like, gosh, maybe I shouldn't trade this anymore. Well, I mean, now I'm feeling like maybe I will because we're at the 3 month mark where we've had this up and down, and it's fared very well. So I actually feel better about options trading this now after the pullback than I did before the pullback. So this is all just data that I'm collecting, right? And it's helping me in my trading. So a pullback, yes, it's annoying, but it has its benefits. It shows you a lot. It teaches you a lot. Okay. So during this time period, we also might need to refine our strategy. So if your options strategy was to sell a lot of cash secured puts, okay, and you're like, oh, I'm so smart, I sell covered calls and cash secured puts. I live to dig on cash secured puts, okay? Like that is just a part of my personality, because here's what you've done. If your primary strategy is that you sell cash secured puts and you're not making put credit spreads, you're becoming the insurance policy for the institutions, okay? The main options traders out there in the market are institutions, just like they are the major stock buyers, okay? So what happens when the market pulls back? They're buying puts, okay? And you sold them the put. So when the market goes down, you end up being the bag holder and insurer for institutions. So you may need to rethink that. Like if on this 10% down cycle, you just took on a lot of shares because you were selling cash secured puts, why weren't you selling covered calls? Then you'd be in a better position right now. I know that sounds wild to you, but you would have a lower cost basis on those shares potentially. And you wouldn't have bought those shares. It's just, I know you guys are going to go like, no, that is not correct. But you are taking on shares when the market is declining. And who says this is the bottom? No one. So I always go lighter on cash secured puts. And if I sell cash secured puts at all, I make them into put credit spreads so that I also have an insurance policy. So think about it this way. Do you want to take on my shares? Because that's what I'm trying to do, is put them on you if I have to use that spread to protect my account. And that's what I'm going to do. So maybe you need to trade the cash secured put more minimally. And so what would you do if you weren't doing the cash secured put? You need to learn better strategies. You need to learn more strategies. You can learn more strategies from me. I mentor on this, okay? So you probably need to learn spreads, and you need to learn how to manage spreads successfully, because that would be a better trade for the market overall. Okay, you need to maybe pick better stocks. Maybe some of the stocks that you had weren't on my watch list. They were something like a Tesla, or what other stocks could we talk about? I don't even know. Just some, like a Foot Locker or any other stock, a Nike, whatever, okay? Like maybe they're not doing well right now, and maybe you're just like, you've been waiting to pull the plug on them, waiting to sell. A market pullback can definitely tell you, hey, you know what? It's kind of time to sell, because this is even less fun to hold during a pullback than it was when the market was going up and I just wasn't going up with it, or up with it in the same velocity that other stocks were. Okay, so if the 3-month charts are down, or I'm going to answer that question from my group call the other day. If the 3-month charts on a stock are down, what do we do? What do we do? This means we're not entering new positions in that stock. We're staying in cash. Or maybe we're not staying in, maybe we're buying other stocks or entering new positions in other stocks, but maybe we're just waiting. Okay, what is the rush? Wouldn't it be more valuable to stay in cash, let this moment play out, and then see how we emerge with more time? That is what I would do. I am not in a rush to do this. My strategy is, wait a minute, just see which way we're headed, okay? And now may not be the time to buy on sale, okay, either. So like, I don't go in right now and go like, oh, I'm just gonna buy like a bunch more stocks because I see them being on sale. I never buy like that. I never actually buy on sale. I know you guys are gonna be like, what, you never buy on sale? No, not really. I buy when the market is strong, because I like to have a cash position. Because what's gonna happen is that I'm gonna wait for that 3 to 5% bump from here, from where the stock is right now, because that's telling me the institutions are buying back in. And so I'm going to buy in again in sympathy with them. I'm going to wait till they buy, and then I'm going to buy, because they're my insurance policy, and they're my early detection thing, that we're moving back up. We might go down again, but like, I would rather see a positive direction to get back in than go like, oh, I'm just going to keep buying when we're going down. Especially for options. Long-term holds, I can't say I didn't buy some Costco shares on sale because I did, okay? I might round out a position if I had 98 shares of something and I needed 2 more to do a covered call at this point in time. I might buy 2 shares or something like that. But I really don't get in heavy right now into buying. And that does sort of separate me from the crowd, I realize. But I don't feel like my results can be argued with. So there you have it. All right. So learn new trades. So the wheel, it's really not the bee's knees. Like I'm telling you guys that earlier when I was talking about the cash secured put. It has limitations. It causes risk that other trades don't. If you're selling cash secured puts as your default trade, you may have made yourself the insurance policy for institutional traders. Sorry for the typo there, guys. So consider that you may not want to be that in the equation in life. Like as a trader, you may not want to be the insurance policy for other traders. Like there's a downside to the cash secured puts and there's a downside to the wheel because we have to take on shares and we have to be the insurance policy for the other people. So what is my suggestion here? Learn spreads from somebody who knows what they're doing, and then learn how to dismantle spreads. So I think people like call that ladder out or ladder in or whatever. I know how to do this like a champ. I love this. A spread to me is only a spread as long as it's useful to me being a spread. As soon as it stops being useful as a spread, I take it apart. And make it into something else to start generating me more money. Okay. Now, we also get to work on our mindset, and this is huge. So take time out. Take a time out. Trade less during market pullbacks. That's not a weakness. It's smart. Like, pausing is smart. Greed, remember, the reason that you're upset when it pulls back is because greed is going like, we should be making money right now. We should always be making money. In fact, we suck if we're not. That's not true. If you are trading less right now because you're a little bit like, this sucks, and I don't know what to do. If you're literally going like, I don't know what to do, don't do anything. Don't do anything. I mean, protect your cash first. Protect the cash that you have in your account first. And then after that, you can make a plan. The reason you don't have a plan right away is because we don't know what direction we're going in. And there's no indication of direction so much. So chill. Just chill. You have permission to chill. You have permission to take your dog on a walk or go have a coffee date with a friend. This is not the time to push things. Don't push things. There's no reason. It will just put yourself at more risk. It will not bring in more benefit. Okay, resist doomsday thinking. So what's happening right now is not happening forever. So, I mean, I don't know. You guys have probably been through this before, but you can have the market pull back for 5 days and you're just like, oh my God, this feels like a year, right? It feels like a year. It's not a year. It's a couple weeks, it's a month. Like, it's really like a blip on the radar. So, like, again, refocus your energy, do something else. Maybe it is time to take a course to learn how to trade down markets, or learn if there's a chartist out there that you really want to follow that can look at SPY and where it's headed. That is one of my favorite things to do during this time. There are a few traders that draw SPY charts and make predictions on SPY. And I go and look at them and I see what they're saying. And the interesting thing is a lot of times they don't agree, and they're excellent chartists, right? But that just proves to me no one really knows. So keep that in mind. No one really knows. But, maybe you want to start following a chartist to see if there is somebody out there that you can come to trust. Also, you're not psychic, okay? Stop thinking you should be psychic. There are so many things that, like, here's the thing everyone says. You can't time the market. Everyone says that. Okay, you can't time the market. Okay, but you admit it. You think you can. You think you should be able to. It's not that you think you can. You think you should be able to, and that's ridiculous. Okay, so market pullbacks catch everyone by surprise except for the people who are bearish and are going like, I knew this was coming. And they've been saying that for 2 years. So eventually they're going to be right? Eventually they're going to be right. It's the silliest thing. Okay, so you can't time the market. Just accept that. You're going to be susceptible to pullbacks. If you don't like the way that a full pullback feels and you just really hate it, Maybe investing in a savings account is for you and getting 4.8% per year in a CD or something like that, or a money market account. Maybe the stock market isn't for you. For me, it's for me. It's for me. I'm going to live with these pullbacks and I'm going to move forward with them. They're just a fact of life as me being an investor. So all I have to do is manage my mindset, and then I'm back in. I'm back in making money. So you also have to give yourself grace. So acting quickly or pushing trades is only going to blow up in your face. Okay? Take a step back. Don't rush. If you made some mistakes during this time, you get to clean those up right now, deal with the consequences of them, and then not make those mistakes again. This is just one pullback of the many pullbacks we'll go through in your lifetime. But now you have the benefit of knowing what that looked like, what it felt like, and you got to adjust your portfolio from there, and you got to learn a few things, okay? So take what you learned and use it to your advantage. Wait till those charts are ticking up again to enter more longs. Read the news. It's so important to read like Yahoo Finance News right now, and become in the habit of doing that. Wait for better signals to emerge and then act on that. So getting these clear signals, it's really normal for those to take a month. So a month is not that long. Like, adjust your time frame and what you find to be a long period of time versus a short period of time, because a month is not long in this market. It's not long at all. So it can easily take a month for new signs to emerge, but like, start looking at those words that are triggering the market. Right now it's tariffs. That's the word that's spooking the market. If you keep hearing the tariffs, see somebody talking about tariffs that's in a position of power, right? That's what happens. So, I don't know. You got to keep an eye on the news. All right? All right. So that wraps up today's call. I flipped over and saw that I'm done with this. This was really fun to make. I've been waiting for a pullback to make this video for you guys. If you need help at all with trading options, there is a link down below. I do a millionaire mentorship program where I teach you 7 trades that helped me get my results in 2024. I made $400K off of a $600,000 portfolio. That year was easy to trade. This year will be tougher. I can tell you that right now. But I do have the skill set and the trades to make myself a lot of money this year, and I want to help you do the same.